And in the UK, markets have resumed after the Easter holiday with the FTSE trading in the red in the morning. Let's get update from my colleague in London, Juliana. Good afternoon, Juliana. Welcome back after the Easter holiday.
Thank you, Chimase. Good afternoon. Welcome back to you too.
Now, it's first trading day, of course, after the holiday. Bring us up to speed with the intraday numbers at the moment and, of course, their major drivers.
Well, the FTSE opened in the red, still in the red intraday, trailing behind its European equivalents. The all-share is down by just over 0.5%. The FTSE 100 is down by 0.39%. And the FTSE 250, the domestic market, is down by over 1%. In currencies, the pound is just up on the US dollar by 0.16%, down on the euro, though, by 0.16%, and down on the Japanese yen by 0.11%. It's worth mentioning that in the UK, one of the major drivers, which a lot of people are talking about this afternoon, is UK GDP and the Office for National Statistics that's dealing with the budget amidst the coronavirus pandemic, has released some data suggesting that GDP in Q2, which is this current quarter, could fall by as much as 30%, which is an alarming amount, really huge. There is a lot of discussion about how Britain can get itself out of this financial slump if the lockdown measures do continue. The data also suggests that a further 2 million people could become unemployed. So that really moved the FTSE and sterling earlier today. And also as well, it's worth mentioning that even after the historic oil cut meeting on Sunday, that BP, Royal Dutch Shell, their shares are down at intraday.
And of course, talking about corporate news there, fashion retailer Next stopped taking orders after it reopened in a limited way following a 3-week break. What happened? Because they just announced they are reopening and then they're announcing they are stopping.
Well, what happened is they had an overwhelming amount of customers, and after 8:30 a.m. This morning, they had to cease trading for the day. Next, about 3 weeks ago, alongside some other retailers like River Island and the luxury brand Net-a-Porter, decided to halt their online productions because many staff were complaining that the warehouses were just not safe enough to maintain social distancing. Next's bosses believed that they had got that up and running, and so therefore they started allowing some sales, mainly for children and some small homeware items. And they did put a limit on that to stop workers having to overexcel themselves after 3 weeks off. And yes, at 8:30 a.m. they had reached that number and they decided to cease trading until tomorrow. Some analysts see this as a really good sign, shows that even in a lockdown, customers are still desperate to get their retailing splurge on. So it is seen as a good sign. But look, you know, Next, we're pretty honest, even though the UK high street has suffered over the past couple of years, Next has bucked that trend, but their CEO said they expect £1 billion worth of profits will be wiped off their sales this year due to the coronavirus lockdown. But in a short story, that was good news for them today.
And talking about expectations, what is the outlook for this new week? Are there companies to watch this week?
Well, this week is a short week. Of course, everybody is watching Brent crude, which is the benchmark for oil. Even after the historic meeting on the weekend, oil prices are still pretty low at the moment. Also, tomorrow, Wednesday, we will see the resumption of trade talks between the EU and the United Kingdom. Of course, these are going to be done by video conferencing. Michel Barnier, the EU's chief negotiator, is back and fit after he confirmed that he tested positive for the coronavirus. Although there is lots of discussion on both sides of the channel about whether or not that December the 31st deadline will be extended, which told that tomorrow that is not going to be part of the discussion, that the UK is still looking to exit the EU formally on the 31st of December. On Thursday, we will be receiving an announcement from the UK government about just how long these COVID-19 lockdowns will continue. It's estimated that it won't be anything less than 3 weeks, taking us into May, which for some people, I would say the majority of people, is a good sign. But there are growing concerns in Britain, Chimmy, just about the economic impact of this, especially for small businesses. There are so many measures that Chancellor Rishi Sunak did mention a couple of weeks ago, but it's just not trickling down. It's one thing to decree that you can help. It's another thing to, actually help. So there are major concerns for that, and that's what we'll be looking out for this week.
Well, thanks, Juliana, for those updates. We'll keep our eyes on those. Enjoy the rest of the day.